Ladies and gentlemen, good day and welcome to the Tamilnad Mercantile Bank Limited Q1 FY26 earnings conference call. This conference call may contain forward-looking statements based on the beliefs, opinions, and expectations as of the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. We have with us on the call today Mr. Salli S. Nair, Managing Director and CEO, Mr. Vincent Menachery Devasi, Executive Director, and Mr. Sanjoy Kumar Goyal, Chief Financial Officer. I now hand the conference over to Mr. Salli S. Nair. Thank you, and over to you, sir.
Good morning, and thank you, Rio. And it's a pleasure to be part of this analyst call today morning. Yes, I think if you look at the performance of Tamilnad Mercantile Bank for the first quarter of FY26, I think we have delivered a creditable performance. And also, if you look at the larger picture, we have stabilized more or less. The operations also have now been stabilized. The foundation is getting laid, rather a strong foundation for a takeoff, in the subsequent quarters. If you look at the business, I think business has always been a worry, particularly the deposits, whether we are in a position to raise it. I think that's something that has seen an uptick, both the deposits, the total business. Now it stands at 30th of June, it stands at 98,923, is up 9.86%. And deposits on a year-on-year basis has more than doubled to 9.38%. It is at 53,803. Incidentally, this bank has clocked a lakh crores. I think that's the first peak that has been done. I'm sure many more such peaks will follow. So the deposits, as I said, it has more than doubled. The pace of growth has doubled. So we are really seriously getting back into our resource mobilization for the kind of growth that we are anticipating. The CASA has been a worry. In fact, it has been a worry across the system and in the bank as well. And I did outline the last quarter and the previous quarter that we have taken a number of initiatives in this. And it is beginning to deliver, including the transaction business units that we set in place. In the first quarter, I think again, the trend of declining CASA has been arrested, and we have been able to reverse it with a modest year-on-year growth of 4.51%. On a quarter-on-quarter basis, this is an improvement of 34 basis. There's 34 basis point on the CASA share. RAM continues to be our focus, and that's up 11.93%. It currently stands at, as on the 30th of June 2025, stands at 42,100 crores. There has been a slight compression of NIM. I'll come to that later. The operating profit is at 412.26. It is lower on a year-on-year basis. There are reasons for which I'm sure we will explain. Net profit is up 6.13%. So on the operating profit, what we have also done is we have upfronted some of the costs that in the first quarter itself. We normally provide the performance-based incentive. In last year, that was about 37 crores. And it's normally amortized. So first quarter of last year, in FY25, we have taken just 8.74 crores. This year, the entire 41.27 crores has been upfronted and has been absorbed in the quarter itself. So despite that, we have been able to deliver a 6.13% growth. Again, on the net profit side, on the operating profit side, both the connected, of course, is that we did have one-off in first quarter of FY25, which including recoveries in the technical return of accounts that was not available in quarter one. So according for all that, I think it's a decent operating profit that we have delivered, a decent net profit that we have delivered. And coming to the stress side of it, the credit cost is just about 6%. Again, tight control, GNPA down 22 basis, 1.22%. NNPA, year on year, 32 basis down, virtually just half. Return on assets was at 1.88, and it has come down to 1.82, a reduction of 6 basis. But sequentially, if you look at what we stated last quarter when we were analyzing the results of FY25 and the quarter four of FY25, the March quarter of FY25 it was at 1.81. So there also sequentially it has moved up. Return on equity, of course, is 13.30. It's down, but more or less stable at the moment. And PCR on book is 73.04%. So, and that's a sharp increase that you have seen, up from 55.22%, 17.82%. We have ramped it up to 73. That is on book. That is the PCR on book. And if you also take the technical write-offs, it is 94.32. As I was saying that we did take a lot of initiatives on the CASA side, including, we in fact opened 7, both on the digital side and on the branch expansion side. I think this quarter itself we have opened new branches, all aimed at deposits and also in particular CASA. The transaction business group that we have initiated, early last quarter is slowly beginning to help us to, turn the tide on CASA. We have also introduced online account opening towards this, and the sum and substance of the aggregated initiatives taken is we have seen a year-on-year growth of 4.51%. The CASA stood at 14,411, which I'm sure going forward the riding on the initiatives will get strengthened. Retail deposits continues to be good for us, 11.25%, including the bulk. Bulk is also pointing out to the kind of high net worth individuals that sort of banks with us. It's at 11.43%, term deposit altogether at 11.28%. So on our resource mobilization, I think our initiatives, the branches are beginning to take, and the growth is now beginning to come. I think at 9.38%, as I said earlier, it is more than double what we have done on a year-on-year basis. So CASA share is up 34 basis. As I just mentioned, it is at 26.78, up from 26.44. So year-on-year deposit growth, I think, has been steadily picking up over the quarters. From 4.64, it has moved up, now stands at 9.8. So in no quarter we have, the growth has slackened, which points out to the kind of focus that we are bringing into this area. And we expect the CASA also to mirror that going forward, riding on the initiatives we have taken. On the advances, yes, on the MSME side, we have a lot of initiatives being taken. As I did mention in the last call as well, that we are setting up credit management centers, and the quarter we have spent in fact in tweaking this and and training a large population of who are going to be in the CMCs, the credit analysts, the relationship managers. There was a large contingent undergoing training, and as well as we are also looking at setting up the online platform. So there has been a bit of a disruption there, which is in the nature of laying the strong foundation for the MSME sector. In fact, this is one sector that this bank would be seriously focused on, and you can see some of these as the quarters pass by. Overall, on the RAM side, I think we did the bank did deliver 11.93% and of growth, and overall the growth stands at 10.44%. 30th June we closed at 45,120 crores. The CD ratio continues to be 83.86. I think it's under 85. We would like to see it remain around 85 or under 85. We're not really worried about this because our capital adequacy ratio is in excess of 32%. And the leverage ratio is 12.44, which is something that gives us, I'm sure, not just this bank, I'm sure the investor community also will take a lot of comfort on that. There has been a lot of talk in the market about unsecured portfolios, right? I think RBI and the system, the banking industry itself is worried. And then I come to Tamilnad Mercantile Bank, the unsecured portfolio just stands at 0.28% of the advances. That is 0.28%. So we are largely secured. Our portfolio is largely secured or almost entirely secured. And even in the unsecured exposure, the NPA is 0.43%. So even there, I think our tight control on the stress continues. On the financial performance, interest income is up 8.20%, and the operating profit, the total income is at 6.77%. Again, like I said earlier, there was a one-off in Q1 of FY25, which helped improve the interest income in that quarter. If you look at the expenses, you will see that there's a number 20.24, and particularly employee cost was 24.24%. That is on account of, as I just said, that the entire performance-based incentive, 41.27 crores, that ordinarily in the previous years was amortized over the quarters. We have taken as a conscious decision to absorb it in the first quarter itself. So if you remove that, even the employee cost comes down to 6.70% from the 24.24% that is shown there. So overall, that also has impacted the operating profit. And net profit is at 6.13. If we had negated all that, it would have been in excess of 10%. So the shareholders' value, we continue to deliver book value of 589 and the net worth of 9,328 crores. On the NPA, I think this is again continues to be our major focus in the bank to control this stress. And if you look at it, it is below 550 crores. And that 550 crores has been delivered with zero write-offs. So it is entirely, the reduction is entirely the cash recovery and upgrade, and also accounting for the fresh addition. So that's something that we are fairly proud of. The NPA, like I said, is at 1.22%, and NNPA 33 basis points. Slippage ratio 5 basis points. I think another, it is just at 22 crores and down from 54 crores in the previous quarter, and year on year down from 55 crores. SMA continues to be an acceptable level at 3.05%. And stress asset 1.88%. And the other aspect that I would like to bring to the attention of the analyst is the collateral coverage that we have. On the stress book, as I said earlier, our stress book, the GNPA is below 550 crores. It stands at 549.12 crores. And the collateral cover of this book is 108%. And we have provided this book 370 crores. So which means that once we start resolving this, which I'm sure will happen over the next year plus, through the year and the year plus, this provision that we have given is largely likely to return. So on the key ratios, the NIM, we did take a bit of a hit, 3.84%. Then this is something that was anticipated, and if you recall, I did mention in my last analyst call that our NIM would be between 3.80% and 3.90%. Of course, we did have two rate cuts that happened 0.5% initially and 0.5% subsequently. I think that impacts the NIM as the repricing of term deposit. I think the bulk of it, about 66% of our term deposits is in the 1 to 2 year bucket. So it takes a bit of time to reprice it, pricing, and that is impacting the cost of deposit. But even then, it is at 6.01%. And the yield on advances is also, I think, it has marginally come down 10.02 and 3.84. And this number of NIM 3.884%, going forward, we expect it to be in that range or marginally more. Now, I'll stop here, and I think I will take some questions and answers, and I'll be happy to answer them. Thank you.
Sure. Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask questions may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. First question is from Jay Chauhan from Trinetra Asset Managers. Please go ahead.
Good morning, sir. Am I audible?
Yeah.
Thank you for the opportunity. So I just have one question. So, sir, with the NIM moderating from 4.25 to 3.84 in Q1 FY23 and your guidance of 3.80 to 3.90 for FY26, I just wanted to know what specific strategies are you implementing through your transaction business group and elite services initiatives to improve your funding mix, and how sustainable is your deposit cost management given the competitive environment, and what levels do you have to defend margins in a declining rate cycle?
Yeah, of course. I think it goes without saying that the market is really competitive for deposits, particularly when you look at the fight of, deposit in looking for higher yields and, what's happening in the mutual fund industry. So we were conscious of it, and that's why, in fact, in the last year's call itself, I did mention that we have started a transaction business unit aimed at, getting the CASA or retaining and strengthening the CASA base. And I think over 100 relationship managers have been posted exclusively for, particularly the current accounts, And current accounts is the focus, current accounts and the task accounts, and they have been posted, and they are now in the market, and that's beginning to show in some of the numbers that are coming in. So the CASA mix, as I just said, riding on the transaction business that have been initiated at virtually across many of our strategy branches. We do have a relationship manager in strategy branches placed to look at the CASA, particularly CA part of it. And like I said, that's beginning to show some results. On a quarter-on-quarter basis, our CASA share has gone up 34 basis. And this is something that we will continue. We have just launched, in fact, in this month, an online onboarding process for the current account holders. And we are also looking at, several initiatives at the branch level itself. In fact, we are looking at, nearly 200 data entry operators to relieve pressure on the counter, and so that they can start also looking at referrals and asking for savings bank accounts. In addition to this, we have also set in motion launched a elite services group that is aimed at the existing depositors, particularly the savings bank holders. And this elite services group would have relationship managers giving them end-to-end services to some of the high net worth or high deposit customers or others. So that's just been set in place, and both the initiatives together, I trust, and I'm sure will help us, retain the existing customers as well as improve the CASA customers going forward, and the CASA share in the advances. We are hoping that will start inching up. And I think is that okay, or did I miss out any part of your question?
No, sir, nothing. That's it from my side. Thank you for the answer. Thank you.
Yeah, thank you.
Thank you. Next question is from Lakshmi Narayanan from Tunga Investments. Please go ahead.
Yeah, thank you. A few questions. As a bank, I look at it, we have one of the best ROAs among all the private sector banks, especially the old gen private sector banks, and we have the highest capital adequacy. We have the best GNPA, right? But I find something is holding us back from growing our core, which is the MSME. And if I look at the last full financial year, the growth has come from gold loans, and MSME has actually been struggling for us. Now, is it a conscious choice, or we are actually losing market share? Because when I look at some of the large private sector banks like the ICICI, HDFC, Kotak, or even IndusInd Bank, Axis, but the growth is coming from the so-called business banking / SME banking. While we seem to have either consciously, holding us back. And I mean, it's just trying to see why with such strong positioning, we are holding back growth.
Lakshmi, let me tell you that MSME is the focus for the bank. It's obviously Mercantile. Now, when you look at the name Mercantile, it just suggests that we are there in the MSME space. If you look at the first quarter, I was just mentioning that we are putting in place a lot of initiatives, laying the foundation. I did mention in the last call also that we have started, we have set up credit management centers. And when we were looking at centralizing some of the process, we realized that it has to move in conjunction with the automation of the appraisal process itself. So I think that process, so we have just sort of stepped back from that. The automation process is now being pushed, and we expect by September that process to come online. Hitherto this bank was looking at MSME processing in a manual way, and that you can't scale up when it is done that way. So we have now contracted with one of the top service providers, software providers in the country to source a LOS package and a loan management system package. And that implementation, we have already contracted. That implementation has started last quarter. It is not an easy. It takes time to get this, get it on the ground, and get the productivity gains from that to start coming in. And that's one aspect of it. The second aspect of it is that we have also recognized that some of our when we enter the market, we should enter with relationship managers and credit analysts of adequate skills. And that's something that we focus in the first quarter, so that we have the foundation laid for a strong foundation laid for a takeoff in the other quarters. So there has been a substantial training. Several, in fact, credit analysts have been trained twice in the first quarter, and in addition to that, even relationship managers have been trained, even not only within the bank. We have also sent them to train outside. So this skill set improvement that we are focusing on, along with the kind of investments that we are doing it on the online appraisal systems, which I just did mention, the loan origination software, the loan management software, both aimed at the MSME, gives me the confidence that the numbers, if you look at the second quarter, it'll begin to show. And in addition to that, we have also set up DMCs in the other centers. We have not formalized it. We have placed our leadership there and we are getting them to move into the market and start looking at new business. Now that's also yielding some business, some kind of a flow is happening and today when I look at the pipeline, and I am having a healthy pipeline of close to 1,000 crores, which is under process and which I'm sure is going to show some numbers, which is going to increase some numbers for the second quarter. So to put it, to summarize it, yes, that is going to be our focus, and that is where you will see some numbers happen in the second quarter and going forward.
So, what kind of growth the bank is, either internally budgeting, right? Is it, and which is the key segment? Because last year the growth has come from gold loans, and particularly in agriculture. So, what would make you happy at the end of 1 year when the full financial year is ended? What kind of growth will keep the management glad?
Yes. Let me tell you that the growth or the focus, gold to us is an OTC, over the counter product. That will continue at the branches. So that the current growth momentum will continue. There's absolutely no reduction in that. We will continue to there. But where the focus of the bank is currently in ramping up the MSME. So you look at MSME and the continued growth in the gold loan. I think together I did mention last call also that we are looking at about 15% kind of growth. I'm not anticipating particularly the MSME side. Even in the first quarter, we anticipated that there will be a bit of a disruption and the growth will not happen. Like I said, the foundation is being laid. Second quarter also, I don't anticipate, there will be some growth, but not to the extent. But in the second half of the current year, that is when we would have both our, focal areas, skilling of the loan staff as well as the loan management, the phase 1 of the loan management systems also would have gone live. I think we will see the benefit of that in the second quarter happening. So both together, from the 10.44%, that is largely riding now on the gold loan. We expect once the growth also starts coming in from the MSME sector, MSME portfolio, I think together, we should see the growth moving up to about 15%.
And so one question related to your annual report. In the annual report, certain accounts were actually mentioned as fraud. So I just want to understand how much of that is actually being provided in the last 2-3 years. What is the breakup?
No, I think let me tell you, as per regulation, the fraud account has to be fully provided the same year, and obviously the fraud accounts we have provided 100%. But what is the number in area?
No, because there is one which happened in, I think 2 years back, one cotton thing in Andhra, which was almost like 165 to 170.
Yes, Andhra-based account, and it is in fact the largest of our NPA, and we have provided it 100%.
And that has been provided as called out as a fraud account.
It was declared, but they went to court, and RBI has advised us to actually take the tag off. So it is not called a fraud account at the moment, but despite that, we have provided as a prudent measure 100% provision.
Got it. Thank you, sir. I'll get back to you.
Yeah, thank you.
Thank you. Next question is from Sana from Evergreen Capital. Please go ahead.
Hello. Good morning, sir, and thank you for the opportunity.
Yes, Anna. Good morning.
Sir, I have few questions. Like the first one is in retail advances, we have seen significant growth at 27.91 on YOY basis. Can you please elaborate on which sub-segments are driving it? Is it housing loan, personal loan, or vehicles?
No, I think housing loan, has really not is sort of stable at the moment. It's largely coming out of the personal loans, and to a very large extent, it is coming out of the gold loan, where we have sort of started prying open that segment as well from a gold loan perspective.
All right, sir, noted. And sir, in MSME book, what is the in MSME, in MSME loan portfolio, can you please share the composition in the terms of sub-segment and which areas are currently under stress? And what is the average ticket size of our MSME loans?
In the MSME side, we do have, you are looking essentially for the stress in the MSME side, right?
Yeah.
Or you are looking for the segment of the MSME?
Sir, I am looking for sub-segments in it.
Sub-segment of the MSME. Just give me a second, I'll just get you that. Can you quickly come to that page? Yeah. No, come to the next one. By then, I'm sure I can get you that. I think we will.
Okay.
Textile is a major area for us. And
all right, sir. One more question I have, in the changing, there is a continuous changing interest rate environment. How are we placed? How are we going to maintain our CASA ratio forward, and how are we looking to build it up?
I did mention this earlier also that we have taken a few initiatives here. I did mention about an initiative that we took in the last quarter of FY25, where we said we are setting up a transaction business group, and we have a sizable number of relationship managers in the market to look at the current accounts and the tax accounts. And in the first quarter of this year, we have also taken another initiative in the form of setting up a elite servicer group that is looking at the high net worth, the high value depositors, and particularly on the current account space. I think that we have sort of initiated in about 50 RMs, elite services group RMs have been sort of set up. We have set them up in the first quarter, and together with the transaction business group, I am sure that the CASA space will come back. We have seen some erosion there in the last year, and that's something that we wanted to reverse. And so happy to state that in this quarter, I think some results are being seen on that, and we are seeing, like I said, the 34 basis uptick we have seen in the CASA share. So the reverse of that erosion sort of we seems to have been able to arrest it, and in fact, the CASA share has moved up. And I am sure that with the kind of initiatives that we are taking, we are also looking at several digital initiatives in this space. We have brought in the customer experience package has been implemented in the first week of July. We are in the process of completely revamping our internet banking package so that the customers get the conveniences and several services for which they have to come to the branch today is tackled through the internet banking. So that's something that we will see happening towards December of this year. It's a little distance away, but these are all initiatives that we are taking to strengthen the current account and savings bank, the CASA ratio. And in the branch itself, we are looking at business process management, where we are trying to reduce the current manual workload on the branch staff, so that they are freed from the daily routine, the maintenance work, and then they can be shifted into the sales role. So that's also a work in progress, and I'm sure we can, as the days goes by, we can give you more color on that. And what you did mention earlier about the area that we are in. I just got that breakup of advances that we have. We are significantly on the textiles. We have about 1,000 out of the total portfolio. We have about 1,100 plus on the textiles. Food processing, we are quite strong. We have about 772 crores. Engineering, iron and steel, about 230 crores. Gems and jewelry, chemicals, engineering, construction. I think we are there across several sectors. So it is a fairly well diversified portfolio that we are looking at. And within the MSME itself, if you look at the micro, we have about 9,000 crores, the small enterprises at another 3,800, MSME, and the medium about 600. So it's again fairly well diversified. And the ticket size, I think that's where we are focusing and improving the ticket size, and it's about 20 to 25 lakhs, well, closer to 25 lakhs.
Okay, sir. Thank you so much, sir.
Thank you.
Thank you. Next question is from Rohan Mehta, who's an individual investor. Please go ahead.
Hello. Good morning, sir. Thank you for the opportunity. Sir, I have a couple of questions. Just wanted to get your opinion on what your growth expectations are in terms of deposits. Do you see them outpacing advances? And if you have any particular strategy on that front?
See, the initiatives that we have taken on both sides of the balance sheet. We are focusing the liabilities. We are focusing on the assets. I just mentioned about the MSME that we will see the growth coming back into the MSME. The first quarter was a conscious call to lay the foundation. So both sides, the growth we expected to move up. The deposits, we did on a year-on-year basis. I did mention that we doubled the pace of growth. So that growth would continue there, and we are hoping that we end up the year in excess of 10%, maybe between 10 and 12% is what personally I anticipate. It all in response to the kind of initiatives that we have taken on the liability side, revamping the branches. More branches are coming on stream. We have just done 7 branches in the first quarter. And we have just appointed the 29 branch managers for new branches. So that methodology also we are now looking at. We have the branch managers in place before the branch itself so that they can connect with the market. And on day one, they can start with a certain critical mass. So that's also happening. So the branch expansion is on. There are several initiatives being taken on the digital side. So altogether, we are hoping that, we end up the year on the deposit side on a 10 to 12% of growth. And on the advances, our ambitions are slightly higher. I think I did mention earlier in response to a call that, once the growth in the MSME comes back, which is bound to, given the kind of initiatives we have done and given the kind of pipeline that we currently have, across the country and across the centers, we expect the MSME to contribute equally to the growth. And we are hoping to close the year with a 15% kind of growth. So it is happening, and on both sides, the advance growth may be continue to be a little higher than the deposit growth. The deposit we anticipate, like I said, in the 10 to 12%, and advances closer to 15%. So
I see. Thank you for that input, sir. Sir, in the second half of this year, do you see our cost of funds stabilizing or reducing since that exerted some pressure on our NIMs in the first half?
In the second half, I expect the NIM to stabilize. In the sense, like I was mentioning earlier, the repricing of term deposits that we have substantial it'll take a while, and as the repricing gets passed on, because quite a bit of repricing on the asset side has already been absorbed. So we expect the NIM to not be stabilized. My personal anticipation is that as we close the year, we should be looking at a NIM in the 3.85 to 3.95% kind of range, because that is the kind of numbers when I extrapolate, I get. So it all depends on, again, on the MSME side also, we are consciously looking at how do we price our MSME for a finer, so that we get a larger chunk of the market in areas that we operate. So even after accounting for that, I think that we should be in the 3.85 to 3.95% kind of NIM when the year goes.
I see. That's helpful, sir. Just a couple of more questions. Would you expect our GMRA to move a little higher, since SMA2 has also moved up to 1.02% in the coming quarter?
SMA2, again, it unfortunately was a function of, the precise time in when the quarter closes. You had 2 holidays, that it was there. So ordinarily, I think, because there was a bit of a spike essentially on that count. Going forward, I think I don't see that happening on the SMA2 or the SMA itself. I think we are at 3.05%. No, I think that's the kind of number. I think perhaps even it will be even better than, right? It will be even better than that. So I don't anticipate some of them slipping into the NPA status going forward. We will continue to keep the NPA. My own reading of it is that it will not go beyond 550 at any case. And as the expansion of the advances portfolio happens, as a percentage, it should continue going down.
I see. Sir. So just one last question, if you could give some color on, since some of our shares have been in litigation, any visibility on when there can be some closure on that, since it's been weighing on our capitalization and valuations?
We did have, there was on the 7th or 9th of July, I forget which date is it, the litigants were before the High Court, and they are postponed to October for a final closure. So sometime in October, that's likely. I mean, you can never know on the legal side how much time it takes. But what is happening is, that is not impacting the bank in any way.
Right.
So that is something that we have ensured, and we have also, if you look at the ED's TOCOS notices, and we have got expert opinion from one of the top legal firms in the country, and they have stated that it's not going to really impact us. Even the fact that the TOCOS notice was for the conversion or the issue of bonus shares, which involved no additional funds. So I don't think that's going to impact the bank in any way. But we also, like you, await closure of the issues before the court, and I'm sure. And I really can't put a time frame into that, given the kind of the time span that is normally taken in the legal while handling the legal remedies. Yes.
Process. Fair enough, sir. Fair enough. Just to close it, you spoke about MSME, sir. So since our SMA 0 and 2 both have increased, do you see any stress towards MSME, or if you could give some visibility on that?
Like I said, one advantage this bank has. I did mention also that while talking about the GNPA, that our GNPA of current 549 crores is covered by collateral to the extent of 108%. When the GNPA gets, and we are sitting on a 370 crores of provision. So when the GNPA gets resolved, this provision will come back. So that also gives us an advantage in actually managing the MSME portfolio itself, in the sense that, the recourse mechanism is very strong. And you see, it moving between SMA 0, 1, 2, etc., but it never sort of flows into the GNP. And that's something that we have been seeing, and it sort of toggles come back between SMA 1 and SMA 2. And even in the SMA space itself, it's moving around the 3%. So I don't anticipate stress in the MSME sector in the current portfolio. And like I said, the incremental portfolio that we are looking at, the new additions we are looking at, we are, our LMS and LOS packages are getting implemented. To just add to that, I can also tell you that we have just built a business rule engine. So we got a top management consultant of the country to help us build a business rule engine, and that's just been completed. Now we are in the process of validating the risk modeling that has got into it and trying to embed that into the LMS package. And hopefully by September, I think we should be able to do that. And that should improve the quality of the incremental portfolio that the new portfolio that we are going to add from that. So the existing portfolio largely collateralized. We don't have much of an issue there on the stress side. And the incremental portfolio, we are putting in place systems to see that the quality is maintained.
All right. Understood, sir. That's reassuring. Thank you for taking my question, sir. That was all from my side. All the best.
Thank you.
Thank you. Before we take the next question, a request to participants to please limit your questions to 2 per participant. The next question is from Anant Mundra from My Temple Capital. Please go ahead.
Hello. Thank you for the opportunity, sir. So my first question is, sir, on the agri and retail side, most of our loans are gold loans. Is that understanding correct?
When you say most, your understanding is right.
Okay. And sir, so MSME, you mentioned that you're implementing the LMS. Q3, Q4, we should start seeing a pickup. But is there any kind of a guidance that you can give us as to what number should this scale up to by the time we exit Q4?
See, this implementation that we are on, I did mention that we, even without the implementation itself, we have strengthened our relationship mechanism, and we have generated a substantial pipeline. So, quarter 2, we hope to focus on the implementation of the LMS. LOS, of course, is going to look at the retail side of it. So, LMS, the loan management system, which not only looks at the appraisal side of it, it also goes beyond the disbursement into maintenance of such accounts as well. So, it's going to take some time. I think phase 1 would be here in the second quarter, and phase 2 we hope to have it in the second and the third quarter we hope to complete phase 2. So despite some disruption that will happen on that, I anticipate the MSME growth to be about it should be in the 8 to 10% or maybe closer to 10%. That's what we anticipate. And overall, with the kind of focus that we are going to bring into the personal segment, the continued focus on the gold loan, collectively we expect the advances number on a year-on-year basis to inch towards the 15% mark.
Got it, sir. So we are holding on to whatever guidance that you had given last quarter, right? There's no change in any of the guidance that you had given last quarter.
No. The first quarter, like I said, was an aberration because of the foundation that we wanted to lay down for our growth.
Okay. And sir, even the cost to income, so I mean, there's a presentation, I think on slide 26, that the cost to income has constantly been going up.
I did mention this. Anand, I did mention this in my opening remarks that, there is the performance-based incentive that we usually give to our staff for that last year was amortized. In fact, it has been amortized over the years. It has been amortized across 4 quarters over the years. And we picked up only 8.71 crores of that in the first quarter of last year. This year, we have decided to absorb the whole PBI, the performance-based incentive, in one shot in the first quarter itself. That is 41 crores plus. If you negate that impact, your cost to income ratio would be closer to 46. I think something that you can yourself calculate. So that was 41 crores that we did. And that also impacted the operating profit, that impacted the net profit. Obviously, it would have been much, much better had we amortized it. This is a conscious decision that we thought of upfronting the entire expenses, because this expense actually belongs to the previous year.
Okay. So this, I mean, then of course this should kind of peak in Q1 and then normalize Q2, Q3, Q4 onwards.
No, Q2 is, once it has been, yes, obviously. So once it has been absorbed in Q1, it gets sanitized of Q2, right?
Yes. So, my final question was that sorry, hello?
Yeah, tell me.
Yeah. So my final question was that, so we are taking a lot of initiatives in terms of, tech initiatives and a lot of capex is going on. So, I mean, most of this expenses is being capitalized, or we are expensing it directly from the P&L?
Software will be capitalized with a depreciation.
See, the software is being capitalized. Much of what is happening is on the software side is being capitalized, and it has been capitalized over a 3-year period. That means 1/3 of it, 33% is actually only will impact the P&L in terms of depreciation. So it is being capitalized and it will be extended off over a 3-year period.
Got it, sir. And sir, did you give some color on I think we were planning to set up some NRI centers and some credit management centers, and I think we had even started some pilot on that. So could you give some color on where we are on that front?
2 things. NRI center, we did, the initiative is on. I think we have located the place and, the infrastructure is getting ready. We are also going into the market. I don't know if you have seen it, that we are looking for a leader to head the GNFC, that the Global NRI Center. We are looking at it. We have just come out with an advertisement. We have had 2 rounds. 1 round internally to get the right person. So we went out, and there was some bit of an issue on the person we sourced. So we've come out again. So that process is on, and I expect in this second quarter that process to be completed. And we would have a Global NRI Center ready for action. Meanwhile, the focus continues across the branches. We need the leaders so that we get into the linkages, not only within India, also abroad. So unless that happens, so that is continues to be a work in progress. On the CMC, like I said, we have set up the CMC on a pilot basis in Thoothukudi. And I've also stated earlier that the leadership for the CMC, the vertical heads and the CMC head, we have appointed across all the 12 regions. And while the CMC is getting formalized in the other regions, we have told them to move into the market and start looking for MSME business. In the pilot which is happening in Thoothukudi region, the project is on, and that is where, like I said, the centralization of process is working well. It is resulting in a fairly sizable or a significant reduction in the turnaround time. But like I said, all this can fructify only once the platform is there, and that LMS platform is the one we are currently working on. Once the LMS platform is completed in September, the phase 1 I mentioned, and the CMC pilot in Thoothukudi is on the platform, so that we can test out the platform. And once that is completed, I think sometime in October, we will sort of move the CMCs into the other regions as well. So while the platform is moved, the infra is already being built. Like I said, the leadership has already been posted for the kind of takeoff that we are hoping to happen in the third quarter.
Okay, thank you. Thank you for the detailed answers. That's it from my end.
Thank you. Participants are requested to please limit your questions to 2 per participant. The next question is from Jaiprakash Kumar from Coman Capital. Please go ahead.
Hi, good morning. Just a question in SMA account. If you can elaborate on that.
SMA accounts?
Yeah.
Okay. what specific are you looking at in the SMA? Do you want to take it?
What is the definition? What is this definition of SMA account? Is it due for some days or because restructured you have reported separately, so I just wanted to understand what is SMA.
No, you're looking at the definition of SMA.
Yeah.
SMA is essentially par 1 day. After 90 days, after that it becomes NPA. And within that 90 days structure, 90 days period, you have up to 30 days of SMA 0, 31 to 60 days of SMA 2 and 60 to 89 days or 90 days of SMA 3. SMA 2. So SMA 0, 1 and 2, 30 days, 30 days, 30 days, right? And 90 days it becomes NPA. So these are, what you're seeing is all in the 90-day bucket.
Got it. Thank you, sir. Thank you. And you mentioned in the last quarter there is some extra capex you are doing in terms of automation and maybe some system implementations. So do you expect this full year to continue that increased capex, or there'll be some quarter by the end of the quarter you will not have that?
On the IT side, it would continue. Like I said, we have contracted several packages, of which some of them have already been implemented in this quarter. On the 7th of July, the customer experience package that we have taken from one of the leading software companies in the world, Oracle. So that has been implemented in the first fortnight of July. So that's aimed at giving the leeway for improving the product for customers at the counters in the branches and giving a 360 degree of the customers so that the customer interaction relationship and with a clear impact on CASA happens. So that is on the CX side. We have implemented the VMS package, which is the vendor management system. We spend about 1,400 crores for running the bank. So that package has also been implemented in July, this month. And several others are in the offering. I did mention about the LMS. So the phase 1 is on. LOS also it is on. That is, LOS is looking at the retail, LMS is looking at the MSME. So that's on, and I think the first phase 1, is likely to be completed in September. And apart from that, we are also looking at, the internet banking. We are completely revamping our internet banking package. So whatever services is available across the counter, we want to make it available through the internet banking package. So Edgeware, which is the Infosys company, we have contracted them for a complete revamp, which should be ready by December. And from 1st of January, we hope to have it fully launched for benefit of our customers. So that's the other package on, and within the branches itself to improve the productivity and reduce the manual way of handling it. We have brought in the business process management, and I think several projects are underway. I think some of them have already been done, and we are already started getting the benefit of it. I think going forward, I think we hope significant improvement of productivity will happen there. Apart from that, we are also looking at the old record, cartonizing and recharging the old records and moving it out so that we revamp some of our branches from a customer's perspective. So a lot of initiatives are being taken. I think that's the first set of initiatives I did mention across. Whenever I have calls with the analyst in the last 2 quarters, and that's something on, and we will consolidate this for the benefit of business. We expect the second half to have some impact of it. And that is where my confidence comes from, the fact that I can increase the deposit will certainly cross the 10% year on year, and advances will inch closer to 15%. Confidence comes from the fact that some of these initiatives are going to give me a leg up in the second half.
Thank you.
Yeah.
Next question is from Sarthak from Bullseye. Please go ahead. Sarthak from
Hello.
Bullseye. There seems to be no response from Sarthak. We'll move to the next question. Next question is from Darshan Devra from Invest Group. Please go ahead.
Yeah. Thank you for the opportunity. Firstly, congratulations on a reasonably good set of numbers, especially adjusting for the Q1 FY25 figure as well as the accelerated provisioning for the performance, performance incentive which you've taken in this quarter. My questions were, regarding the loan mix. So currently, what percentage of our loan book would be, fixed in nature versus, linked to EBLR versus MCLR?
Now, EBLR, MCLR would be about 50-50. 50% and 50% EBLR, 50% would be MCLR. So
in terms of fixed, it's yeah. So in terms of fixed, is it zero? Fixed book is zero?
The fixed book?
Either linked to MCLR or linked to...
So fixed book, what is the extent of fixed book? That is negligible, right? I'll get you that number, but it is almost entirely it is floating. Split between MCLR book and the EBLR book. Like I said, the 45,000 crores is evenly split between the two. Almost evenly split, 22. The fixed book, I think that is amount, but is very, very little. Not really going to impact.
Got it. And you said that the average, the deposits would take about maybe overall, like maybe a year and a half to reprice. What about our loan book? Like, what is the tenure of our loan book?
The average maturity, I think, I will have to get you that number because you have that number in this survey. I'll get you that number, Darshan.
Okay. All right. Got it. And
you need to get the average maturity of the term loan. I think that's what you're looking for, right? I did mention earlier.
Yeah. I mean, it would get repriced anyway. I'm assuming it'll get repriced either.
That's why we look at is the term deposit. There, 66%, as I said, in the 1 to 2 year bucket. Another 20% in the 6 to 1. So 86% is, in that. So it takes a bit of time. I think that's where the pass-on nature of your repo cut impacts.
Got it. And just, in terms of the MSME space, you did mention that in terms of your loan book, you don't see stress because of the collateral that you have in place vis-a-vis the loan amount, outstanding loan amount. But generally speaking, do you see any slowdown in cash flows or in growth of the MSME sector?
In the MSMEs, the uniqueness of this bank is that, the kind of loyal base that we have been having, we're trying to expand beyond that, ensures that, the collateral factor that is inbuilt into the whole mechanism of credit delivery ensures that, stress is, even if it gets into an SMA, it sort of bounces back into the standard. It keeps moving up and down. So that's not much of a worry for us. Our worry is the kind of incremental, when we contract a new MSME business, how do we maintain the same level of quality? Obviously, it can't be collateralized to the extent that the existing book is. So to that extent, that is one of the reasons why we are investing heavily in the BRA and the kind of LMS packages and the linkages that with outside world in terms of data collection so that we can cleanse the data by quality appraisal. That's something that we will take care. But on the cash flow side, as of now, we have not seen any kind of a lowering of it or an area of concern from a cash flow perspective. I think that continues. And let me also give you that we are putting in place a standard monitoring mechanism to study the cash flow from that perspective. That's the other one of the other projects that I didn't talk of that is coming on stream, maybe in the third or the fourth quarter. But as of now, we have not seen much of a worry there.
Thank you very much.
Yeah.
The next question is from Santosh from SKK HUF. Please go ahead.
Hello, sir. Am I audible?
Yeah.
Okay, great. So I have two questions. One is about you spoke about NIM in the forthcoming quarter. to be something like 3.85, 3.95%. So
Yes.
what gives us
Going
confidence?
forward.
Yeah. So what gives us this confidence in the rate reducing scenario when there is a rate reduction environment and at present our NIMs are much lower than that? What gives us this confidence?
See, what we are also trying to do is, on the MSME side, we have actually dropped our rates to align ourselves to the market so that, to obviate any takeover that may happen. And we have a sizable gold loan portfolio that is growing, right? And there we are introducing, in fact, if I tell you, we are introducing 18 products getting to separate segments in the gold loan portfolio. And this is one portfolio that has been giving us the kind of support for the profits earlier, and we will continue focusing on that. And there, the yield, we anticipated it to be a little higher than what we are getting earlier, because the new products, particularly aimed at the consumption segment, will carry a higher rate of interest. And I noticed that segment is in fact growing. So that will help us, to weather the policy cuts that we are seeing. That is where the confidence comes that, we can in fact look at 3.85 up.
And we are sure about the demand in the gold loan.
I'm telling you from the kind of growth I'm seeing it across my branches.
Okay. Yeah. Second question is about the separate disclosures for gold loan. So what's happening is that when you see a presentation, we just see a disclosure for RAM section, that is retail, agriculture and MSME, but there is no separate mention of the gold loan amount that's outstanding. So any reason for not doing that? Because many other banks do that and they separately disclose gold loan, and then we can understand.
I think that's something we can do it next quarter onwards so that you get a better insight into it. There is no reason. There's no particular reason. I think it is done and it is done. So if there is a demand, we will certainly better to it. We'll have that done from next quarter onwards.
Okay, that's great. So just now, just for the sake of information, what could percentage of total RAM portfolio?
It's a little over 40%. It is a little over 40%.
Okay. Great, sir. Thank you so much and wish you all success.
Thank you.
Thank you very much. We'll take that as the last question. I would now like to hand the conference back to the management team for closing comments.
Yeah, thank you, Rio. I think, like I said earlier, this first quarter is I look at it more as a stabilizing quarter, a quarter that is laying the foundation. And I think the numbers that have been delivered, particularly when I look at the deposits, I think I'm satisfied that my branches are now beginning to deliver, particularly when I look at the fact that the deposit growth the pace of growth has doubled. The profits is reasonably good, particularly when I look at the fact that the one-time expenditure I have upfronted it. And again on the NIM, I think the NIM, I don't think we expect the NIM to go down from where it is today. And so the growth along the NIM is likely to push up, generate the profits as it comes in the next few quarters. A lot of initiatives that are being taken, I hope will result in, and I'm sure it will result in the profit, the numbers, the growth numbers moving up. I did mention that we expect the deposits to go in excess of 10% and the advances closer to 15%. So I hope, my words will be validated by the performance of the next quarter and the quarters that follow. Thank you all for participating in this analyst meet. And if there are any questions separately also, you can take us with us and we'll be happy to share it. Thank you.
Thank you very much. On behalf of Tamilnad Mercantile Bank Limited, that concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.
If you found this video helpful, please like, share and subscribe for latest upcoming videos.